Ladies and gentlemen, sorry, I was just dealing with my audio there. Um, Hopefully, you guys are all doing well. Welcome to the Fintech Frenzy. Sorry, the audio has taken my game away here. Um, okay, so on today's list, we have a couple of different stocks, but the main one that I want to cover for you guys is SoFi, right? Starting with this article that I saw or tweet, and not an article, from Gergiven. I think that's how you say it. Anyway, uh, he ended up posting this. Jerome Powell will mention that the Fed is open to cutting rates by 50 basis points this Friday at his Jackson Hole speech, per Evercore ISI. So, how do they get this information? Absolutely no clue. I don't know how they know this. Maybe talking to some, they heard it from the grapevine, right? So we'll end up seeing whether that's true. But then that sparked the discussion of, what does the market think? Obviously, if that is true, that's some very good insight to what we're going to see. And I mean, it's definitely on the table. But as you can tell, markets are starting to believe this. The chance of there being no rate cut is officially at 0%. I mean, it's been there for about a month now. But the chance of a 25 basis point cut is at 75.5%. And then a 50 basis point cut is being priced at almost a quarter, 24.5%. Okay. Now, this is a double-edged sword, and this is what I wanted to have this conversation about, is how does this truly affect SoFi? Because obviously markets, if you guys were following today, was a boon for, or a boom for stocks that would really benefit from rate cuts happening. 1 second. We can't go another minute without my branding on. Cheers to Moomoo for sponsoring the channel. And how did I remember that Moomoo should be up on the top right? Well, I use their services here. So let's take a look. One, these are all of the stocks that I cover in my watch list for fintech, for tech in general, and a couple different companies. And hopefully you guys see some of the names that you guys like on there. You'll know that I'm keeping up with them. Anyway, on the top, we have Upstart, Opendoor, Pagaya, Affirm, SoFi. This is not curated. It's just sorted by percent change. Okay. These are all incredible companies that are, well, whether they're incredible or not. I don't own the majority of these. I mean, the top four I do not own. I own SoFi. But they're all greatly affected by rate changes, as they have some form of another will be selling loans into a lower rate environment at higher coupon rates, right? I've explained it for some multiple times and for some time, but let me just try to do it again really quickly. So essentially, there's the rates, the coupon rate that'll be added. So then that's the where my hands differ is the spread that the bank or financial institution will try to make their money. But then as this starts to tip away, but their book stays quite elevated, the spread widens and widens. Okay. That's the money that they could make. If they sell those loans, it's not like they get the full coupon rate. Financial institutions might pay a little bit less, so then they can hold on to it for the remaining spread. But it's a good way of thinking about it. As loans or as rates start to come down and these companies don't sign as many new loans, that spread of the existing loan book will be pretty high, depending on how many loans you do have into that. So Upstart, Pagaya, these sort of companies are there if they can potentially help get some extra eyes or AI algorithms to sort out loans for you in this falling rate environment, right? Which brings down the cost of funding. And if they can keep those, coupon rates high, then those loans will be worth a lot. It's not that necessarily high rates are bad for loans. It's bad for companies that do sort of riskier loans, because there's a cap at 36% that they can charge. So if your spread, in order to alleviate defaults, has to be much wider, because there's going to be a percentage of the companies that end up not paying back, and rates are climbing, and that, that's starting to hit, but then this hits the ceiling and this keeps climbing. Well, then, wait, this is so hard to do through the camera, but that gap starts to close if you can only get this high, if that makes sense. I don't know if it does, but well, I mean, it makes sense. I don't know if that's a good analogy for you folk to understand, but as the rate comes down, that makes sure that the spread can be wider while not hitting the ceiling for companies that are in sort of B-list lending uh, environments. Now, SoFi does not fall into that at all. They are as super prime as they can be. They want to, or prime plus, I guess you should say, where we're sort of trying to lend out to companies that are in the 700 plus range in FICO scores, very high incomes. These means that this means that hopefully, in an environment where there is sort of turmoil, because that's usually when rates are going to get cut, is that there's some sort of piece of the economy that is starting to break. And so we need to rush down those rates to make sure that, one, the economy doesn't absolutely erupt, and two, that the Fed hits their targets of 2% inflation going forward, and also making sure that unemployment doesn't break either. But for SoFi, it's still very much in their benefit for rates to start coming down and for them to enjoy the spread. It allows them to sell loans into this environment and should be very beneficial for them. Open door as well. As rates lower, cheaper cost of getting a mortgage or cost of living, and then that allows them to potentially juice real estate markets. Zillow, Redfin, all those companies will be on that list as well. All right. But let me try to explain a little bit more for SoFi using charts, ladies and gentlemen. That's what I like to do. And that's what we're going, that's where we're going to go next. Let me take a sip of my coffee here, and then we'll get on to it. Tanner, what's Moomoo? Will he take the bait? Of course I'll take the bait. It's an amazing brokerage that gets you, if you sign up now, 8.1% APY for your first 3 months. Now, I don't know where that rate's going to end up going if rates end up starting to come down. What you do see from Moomoo is some of the highest rates. I mean, we look at some of these fintechs that we cover here. They offer 4.6, they offer 5%, they offer all these different rates if they're trying to stay ultra competitive. But then Moomoo comes out with a 5.1% and then offering 8.1% APY for your first little bit on uninvested cash in your brokerage. I mean, there's some people that are not getting 8.1% in their stocks. Why take on the risk whenever you can get it, risk free for the first 3 months? Now, let's go in and talk about some of. Yeah, absolutely took the bait. Thank you so much. Let's go and look at some charts, because I'm all caffeinated now and we can move on. Okay, so this is another way for me to try to explain this. This is SoFi's personal loan portfolio. I'm not showing off their total loan book because it'll show the numbers being a little bit off ease. And then there's also a bunch of loans, like their student loans, that just got converted to held for investment. Well, obviously, if it's going that direction, that they're not as keen on selling those loans as they are their held for sale portfolio. So here's their personal loans, all held for sale and ready to be sold to financial institutions if they so please. Now, if I remove myself, or maybe just throw myself to this side, you could see that for the longest time, and this goes back to the first little bit where we had information on SoFi, interest rates were around 0% during this time, because this was around the start of the pandemic. Okay. As we went through, we only started seeing buffs in interest. I don't know why it tells me 0%. Anyway, focus on the actual graphics on the screen. Then in Q1 of 2022, we saw a 25 basis point hike. And then from there, it started to skyrocket. In fact, the fastest rate hike in history. So 1.5% to 3% to 4.25%. This is not actually how the rates went. These are based on the end of quarter numbers. Okay. So this is what it was at the end of those periods. During that time, you can see how SoFi dealt with these rates. And maybe I can blow these numbers up for you a little bit more. Let me just bring that to 18 or even 20. SoFi, for their personal loans, started to sell loans increasingly into these rates. So 10.6% for their personal loans, 11%, 11.6%. And mind you, while they're doing this, they still have an existing loan book that they have to, might be at lower coupon rates that they are fighting against. So they probably ramped it up much more aggressively, but it's holding on to the existing loans as well. And then as this sort of climbs, yes, the spread has thinned. And this is why SoFi stock absolutely deteriorated, is because people were worried about that spread difference, right? Look how thick that line is between the 0% that the Fed's fund rate was at versus the 10% that they're getting at the highest. Then, you're getting, or let's go here, right? 5.25% in Q4 of 2023, this bar right here, and then only receiving 13.28% is not nearly the same level of a spread as it was back in the pandemic, whenever SoFi stock was absolutely juicing. Okay. Then the money that SoFi is putting in to fund their loans is not actually at the Fed funds rate. Okay. This is more of the interbank rate. So they actually need to find those or that rate somewhere else. And so how do they do that? They either use their own capital, they use warehouse facilities, which is essentially corporate debt, or they use customer deposits once they became a bank. Okay. We didn't become a bank till like right around, where was it? Q2 of, where was it? Sorry, Q4 of 2021, Q1 of 2022, actually. I showed the quarter before that. Whoa, let's not skip ahead. Okay, anyway, Q4 of 2021 is whenever we became a bank. And anyway, what you're end up going to see is this average cost of funding start to climb up, same way that we saw the Fed funds rate, spike up in this area. So did our cost of funding. Okay. This is because warehouse facilities are variable types of debt. And to stay competitive with deposits, if you just keep them at 0%, then your customer deposits will go to a different company. Okay. So there's this big rate game of how do we be competitive on the deposits while also staying profitable. And so SoFi took the stance of, hey, let's skyrocket the cost of deposits so then we can get rid of these warehouse facilities. I'll show you guys why they did that here in a second. But this just goes to show you that spread difference, which is what you're seeing in the green here, and how it was not as effective as rates went on. Okay, that's why the stock took a large hit, because SoFi is known as just a lender. Remember, whenever Anthony Noto got in the business, lending made up for like 88% of their total revenue. Today, it makes up for 57%. So another thing that I think that the bears are not fully understanding is that this doesn't even make that much, or it doesn't make as much of a difference as it did back whenever it made up 88% back in 2018, or in, 2017? It was like 99% of total revenue. All right. Let me skip that for a second. I'll just show you this real quick. This is another really important one. Warehouse funding, which is that sort of corporate debt, variable debt that they can get from other institutions, which is at a very high rate. So although SoFi offers a very competitive rate of around 4.6%, and yes, this does look less than 4.6%, 4.3%, that's because some people are not SoFi Plus users. They still put deposits in. It's paid at a much lower rate. Correct me if I'm wrong. I think it's like 1%, something like that. That's what's bringing down that rate from not being at exactly 4.6%. All right. But there's still a bunch of warehouse facilities that come on that are at really high rates. So SoFi needs to transition all the loans that they had at these rates and bring them down into customer deposits. Okay. So obviously, you guys know SoFi has been cranking up their deposits. They're seeing massive growth there. And that leads us to a chart that looks something like this. Let me just throw my camera back over here. So essentially, whenever we got this bank license and started to take on new deposits in Q1 of 2024, now I want to make something clear. This chart is not 100% accurate, okay? It's an assumption because we don't know actually what they're doing with their deposits versus their own capital. So the way that I got these numbers is essentially showing what they would need to do. They want to use deposits first. Then they want to use their warehouse facilities because that's all they use them for. Or sorry, they depending on how many warehouse facilities that they have on their books, they're using that for their lending. Then the remaining amount of deposits would hopefully be used for this, but they could also use their own capital as well. So I kind of tiered it in a way to say, hey, once you use up all the warehouse facilities, then use deposits, then use capital for the the rest remaining. This is what this chart would look like. They don't need to use it that way. They can, there's a whole bunch of really technical banking things that happen in the background for them to maybe want to use more capital for lending in this area and deposits for another reason, maybe CDs or buying more treasury bills or something like this, but that's up to them to determine. But deposits are reaching a point that they could fund 95% of their loan book off the deposits that they have completely. Like I said, there's a ton of intricacy there. That's not actually the rate that they have, but the chart that is exact that Anthony Noto would have would not look too dissimilar from this. The green and blue lines of warehouse and capital would be skyrocketing down while deposits are ramping way, way up. I think somewhere in the last quarter, they said it's somewhere around breaching the 90% mark. Okay. So they're using something like 5% for other activity. But still, that's sort of where we get these statistics. The goal is to get warehouses off the books. We need customer deposits to do that. SoFi, that's why they also say, hey, we're going to be able to keep our rate at 4.6%, while the other institutions want to drop it to keep those healthy spreads. It's all about the spreads whenever it comes to fintech and banks, okay? Where the rates are versus what you're receiving, that juicy middle is the steak, and we like a big, thick steak, all right? Makes sense? So, going back, as these rates fall, the goal would be to, one, you can see it in this quarter already. Look how many new personal loans that they've signed on to this platform really recently. I should have added a chart for the amount of loans that they've sold. I am not sure. Here, let me go here. Where are we at? Okay. Let's go here, and then we'll take personal loan sales. Just chart that out for you guys. That's great. There you go. So we're just going to build a chart real quick. There you go. You can just quickly see, without any of the real numbers, I'll put some numbers on there for you, that during the period where rates were actually skyrocketing, that there was not many loans actually being sold. I mean, it takes me a little bit to actually get all the font sizes right for you guys, but essentially you can see how many loans that they've actually sold over time. Okay, so let's go back. Take this. We'll bring this over here. Skyrocket past that. Let's put this up in the corner. All right. So as rates are climbing, see, you can sell loans in an environment where rates stay the same. Okay. Because essentially what you're doing is just saying, hey, that stake is going to stay the exact same way going forward. And in an environment where rates are dropping, you can sell rates because the coupon rate, that like the stake will get wider. Okay. That spread will get wider. But in an environment where rates are coming down, where the rates are coming up, this is where you cannot sell loans because, people are actually making less and less money because they can get risk-free money for a much cheaper cost than having to put it into personal loans that could default, especially in an environment where rates are coming up. So that's where you saw this absolute plummet of SoFi personal loan sales. Okay. Now we're starting to see an increase. What would be really exciting is once rates start to come down, you're going to see this skyrocket, beat our old high of 1.34 billion and make some real juicy profits there. And not only can you make a lot of money there, but you're going to see so there's another aspect that comes into it. Okay. That's called gain on sale margin. So that's talking about the spread difference between, hey, this is how much the principal for this loan is actually, or how much we put into this loan. But if you want to buy the loan, we're not just going to give you all that, you know, like coupon value, unless like gain on sale can go negative if they believe that the defaults, the people that will not pay back, is going to be higher than the amount that they might make on the interest, which is called the coupon rate. Okay. But if they think that the defaults are going to get, you know, maybe beat targets or lower than expected, and coupon rates are going to be high while the risk-free rate continues to go lower, well, then you're going to end up, you know, buying those loans from SoFi at a much higher cost than you previously would be able to. So just like what we saw in the last quarter, because people are really anticipating a rate cut at the September meeting, that they actually believe, or sorry, not that they believe, they got the highest gain on sale margin of 106% of principal, which means, yes, 13% would be great, but then you have to factor in defaults, you have to factor in the cost of funding, right? Which is all these things that we're talking about down here. And then you also have to factor in the fact that you have to wait for it, right? These are annualized rates, and that could be over many years, but 106% gain on sale margin is instant. You get your money back, you get to go out to the market, sign new personal loans, and you've made your money instantly. Okay, that's why the loan selling is such a really exciting feature, because right now we're selling small bits of our personal loan book. Right, we are signing $5 billion total, but something like $4 billion in personal loans. Excuse me, sorry. Let's check here. Yeah, $4.2 billion in personal loans. We sold $1.2 billion that quarter. But if you look back, like what they used to do, we used to bring on like $1.6 billion of originations and sell $1.2 billion of originations. You could go through your entire loan book multiple times in a year, and the whole time you're getting that gain on sale margin, going out and getting new originations to sell to the market. This is at a high, like that's whenever rates are still. In a rate cutting environment, it's like on steroids, right? Because not only are you going to be able to facilitate that entire transaction, but you're getting a higher gain on sale margin. You're getting a higher spread because, well, people believe that the risk-free rate will continue to drop, and those coupon rates are going to be held fixed for quite some time. So that is the SoFi buff that they get in a rate cutting environment. This is why it's so important. Everyone goes, oh, look at this crappy stock that you're holding. It's like, look at the freaking environment that we're in, guys. Like, did you not watch the rates go from 0 to 5% in the fastest pace in history? Like, of course they're not going to be able to do well. So the fact that SoFi during these periods we're still growing at anywhere between 25 and 35% revenue, well, the lending essentially eroded around them is an unbelievable feat, right? Ever since this company's been a public company, like Anthony Noto said, they've had nothing but headwinds. But that doesn't mean that financial services always has headwinds. It just happened to be the time that happened whenever they SPAC'd onto the market, okay? If that turns around, and they start to get the green light to sell loans, to have, home loan books open up, because now they actually have, they are the principal, owner of a company that can actually go out and get them home loans. They have student loans all lined up, and all these segments that they have can be firing simultaneously. Of course, there's going to be new things that pop up that'll stand in SoFi's way. But those are very, very big ones that are about to clear up if we believe that rates are going to cut, and that's in an environment with a soft landing, right? If those line up, SoFi is very well positioned to make a crap ton of money. Just based on these charts right here. Better funding costs. And this is the thing, right? They did this shift to better funding costs in an environment where rates were extremely high. But whenever we go back into an environment where rates are much lower, it's not like warehouses come back. No, we're a bank now, right? So that doesn't come back. We get all the benefits of having a bank charter, but none of the tailwinds of it being, one of the highest rate environment spikes, not highest rate environment in general. I mean, it's been much higher than where it is today. It's that rate of change. That's the problem, right? That's what made Silicon Valley Bank and all of those other companies have such high stress levels. It's not the high rate, it's the rate of change. So, yeah, awesome charts here to pay attention to. Hopefully, you guys enjoyed that. Let's move on to the next stories of the day. So, one, you guys know, and I know that Shift 4 is an absolute beast. If you guys haven't heard this company, it's an unbelievable fast growing company. And they own about 75% of the total stadium market. And that is not slowing down. They're signing on more stadiums and doing many more things other than stadiums. If this is the first time you're hearing about this company, they do restaurants. It's actually bigger than their stadium business. They do resorts and hotels. That's bigger than their stadium business, but they dominate the stadium space, and that's continuing in that direction. Adyen got massive news today. Very interesting. Actually, it wasn't today at all. It was 4 days ago, but I learned about it today. And so now you guys are going to learn about it today. Adyen is expanding their payment processing to India, a massive, massive industry, and they want to become more of a cashless society. They've done massive steps towards that feat, but Adyen, being the largest player in the enterprise payment space, is definitely going to help forward that, and that might lead to a ton of more volume for Adyen. Could be interesting. Ticker symbol ADYEY. I don't own that company. I did own that company. Made a crap ton of money on a percent base. It wasn't a large trade, but it was very, very quick. I bought it at like 6 and sold out at like 13 or something. And then I had to watch it grow to like $18 and wrote an angry tweet. But that's me. Never been great at the selling part, just trying to focus on the buying part. The goal is to be green. We can work on how green. They also Adyen talked about signing on BMW Group, working on their e-commerce and point of sale, doing the entire spectrum for BMW. I thought that was quite interesting. But mainly, the main story of today is the rate cut environment, where we are, focusing on that, and then finding the winners. And in my opinion, there's not many winners larger than SoFi. Now, I hear some people saying, okay, Tanner, is Nubank also going to benefit from this? Where are they? They not raise as much? So one, they hit a new all-time high today, $14.46, closed just a penny underneath it, and now they're up after hours to their all-time high again. So they're doing phenomenal things. Super excited for Nubank. But Nubank's a little bit of a different beast, okay? One, they are in a completely different geography. So the rate cuts in the United States economy is not nearly as effective for them in Brazil and Mexico and Colombia. They are also facing rate cuts in, I think, all geographies. I don't know about Colombia, but Brazil's definitely on their way, and Mexico's just starting as well. But so they are all sort of in that environment of shifting in that direction. But Nubank is once again a different beast because they don't actually sell loans. Okay. They buy, they go out and facilitate very short-term duration loans, like personal loans and credit cards and everything. And then they hold on to those loans. They don't look to sell them. And then any sort of longer duration loans that they might want to facilitate for you, like a mortgage or something like this, they'll go out and actually find a business and partner with them to, sort of take on that risk. They want very fast money. So they are not getting into the longer style loans that potentially, SoFi might be opening themselves up to. So I don't really talk about the price that I'm going to sell at because there's not a number in my head that I'm like, this is the price that I'm going to sell out at. I have a fair value price for SoFi. But I talk about that and the way that I get to that number more in my course, but shameless plug, but futureinvesting.pro. But no, I was going to say, in terms of my selling thesis, is that it's going to matter on when. So if the stock runs up from 6 to $25, yeah, that's a conversation. But are you talking about, oh, I have a 5-year price target, and over that period, if it runs to $25, then I'm going to sell? Well, a lot's going to happen in that, space. So is the company going to, on a valuation perspective, grow into my fair value? Or is there going to be aspects of the company that sort of shift in their growth, like the tech platform or financial services, that actually still makes it undervalued, but also places it at a $25 price target? Well, I'm not selling in that case, right? So I don't know. The defaults in South America must be risky. Absolutely. And the rates that they pay for those loans are unbelievable. There's no 36% cap there, okay? They're much, much higher rates for coupon rates on the loans, which healthily pay for it. Tanner, do you have an affiliate link for Moomoo? Absolutely. It's down below. You can go to futureinvesting.pro/Moomoo. I love, dude, you guys are getting me into all these plugs. I'm loving it. No, but it is actually a great platform. And the another reason why I took on Moomoo, it was one of the only brokerages where I could actually use as a Canadian, but then also, not sympathize, but like relate with people who are in, the US. I talk about Robinhood, but I don't have hands-on experience, so I don't know how good it is. I'm just trusting you guys. Moomoo, I know it's a good platform because I went from Wealthsimple to Moomoo, and it's much more sophisticated platform than what I'm used to. And then also it's in America. Um, of course, new will benefit lower rates too. They will also benefit the dollar getting weaker. Yeah, I mean, it depends on whether, Brazilian reals are going to get weaker than the dollar as both end up cutting rates as well. So it's not exactly clear that they're going to benefit as rates come down. I don't know if that's as clear of a position as you would take it to be, but that's just my opinion. I'm not saying you're wrong. No, my link does not only work for Canadians, it's mainly an American link. I've had a good amount of you guys sign up through it, and they've all been American. Not a single Canadian has taken me up on it yet, but also that's only like 7 or 8% of my audience. Wealthsimple is great though. Wealthsimple is good. Like I've got no qualms about Wealthsimple, but they pay a lower APY on my money, and they also don't offer any sort of level 1 options or anything, so I can't do covered calls. So yeah, they're fine, but it's just I'm just growing out of it, I guess. I'm not anti Wealthsimple. That's not the stance I'm taking here. Do you have any thoughts on SoFi's employee count? No. No. I'm sure I could track employee count versus revenue per employee. Maybe I'll do that if I haven't already, and let you know the trends there. But that's more what I'd be focused on rather than just the number in general. Like, how does it relate to the actual function of the business? I think that's more important. Um, oh my gosh. So a couple of people making fun of my Canadian accent. How about that? I still don't hear it. I know that whenever I say about, that sounds crazy to you guys, but then you say a boot. I'm not saying a boot. I'm saying about. About. I don't even know how you're supposed to say it. Question: If B of A buys SoFi next week for $25, does Noto get his bonus? That is not some. I would assume so because that's. But I have no clue because the price of the stock needs to hold at that price for something like 60 days, 90 days. So I don't know how that works. That's not something that like I look into. I got to be honest with you guys. I am not too focused on Noto's bonuses as other people are. I'm focused on mine. Moved to US. I left Canada 5 years ago and it was the best decision of my life. No offense to Canadians. Politics, immigration, and inflation ruined Canada. I was an immigrant as well. Okay, so but how do you leave? This is you know, I I understand. So one, I just bought a house, so I'm much stickier here than I would have been previously. Uh the high majority of my family is here. Like these things do hold people in place. And then um it's not that easy to move to the States. It really isn't. Maybe other people know how ways in, but I'm not trying to illegally move there. I want to like, if I am going to become a citizen of the United States, I'd want to become a citizen of the United States. Take a plane, a bus. Yeah, but then I'm only allowed staying there for 6 months. I did not say a hoose. Just bought a hoose. How about that hoose? Got a moose in the hoose. You get a job in the US, get your employer to file for a green card, done. I mean, hey, I did hear something along the lines because I did hear something along the lines of starting a business in the United States. That would be a way that if you needed to be in the States to facilitate your um, business, that is somehow an accelerator. But guys, please do not take any advice here. I don't know what the heck I'm talking about at all. I'm just having a conversation with a guy named Rummy in the chat who hates Nubank, and that's the moral of the story there. That's it. We're just two fellas talking shit. Yeah, I have heard this strategy, but I'm not I'm not a fan of that strategy. Um, I hate to say, but I moved the balance of my SoFi brokerage to Robinhood. I was holding out faith for it. It was costing me too much to not have a full suite of options, unfortunately. Yeah. Yeah. And I really worry about this as well. It's seemingly like the sophisticated uh, investor, the ones that Moomoo and Robinhood and a myriad of other brokerage like active trader focused brokerages is not the user that SoFi is trying to capture. And I think they've made that very apparent, right? All the Twitter people were focused, or all the Twitter support people on SoFi were saying, hey, look out for level one options soon. It's coming soon. And then whenever I said that little rumor that I heard that they delayed it till 2025, no one believed me. But we're in August now, and now it's becoming very real that prediction was not prediction, that rumor was spot on. So maybe we get it in this small period, but who knows? I don't think SoFi cares about the options traders. They make up for less than 1% of investors. That's potentially a good point. I'd like to see what the percentage of overall wealth is, right? Because I don't even care about the amount of people. I care about the total deposits, assets under custody. What percentage of the assets under custody do they make up? That would be a much more important statistic for me. So, which one of you guys has a company that wants to hire me and go through that whole rigmarole to get me into the States? Also, I don't know if what I'm saying is like against the law. That you can't hunt for a job over YouTube comments to get immigration for the sake of immigration. So don't lock me up. This is a comedy show. This is for entertainment purposes only. And we're going to stick to that. Do you think Hood is a good growth stock? So to that extent, what I'll say is I only own growth companies, and I'm a shareholder of Robinhood. So yes, I do think it's a good growth company, but that doesn't mean that it is. That just means one guy who gets his research from this room thinks that it's a good company, but that doesn't necessarily mean that it's worth anything. What is Powell going to say on Friday? Can we take a poll? Absolutely. Ladies and gentlemen, we're going to do this poll. Do we think that I do not do enough polls on here? How the heck do I do this? Start a poll. Will rates get cut in September? Yes. 25 basis points? Yes. 50 basis points? Or no? Stop talking about it. I also find that if you make something just slightly funnier, that's what everyone will pick. So maybe I should have just put it as no. But 62%. Oh, you know what? I'm not going to say what I'm going to say. Guys, please put in your real predictions. Are we getting a 25 basis point cut, a 50 basis point cut, or are we getting no rate cuts? Go in the comments. Check that out, please. I really want to see the odds here. Or did I miss something? Powell is going to go up on stage and say no rate cuts. We need more data. Powell do nothing. No rate cuts. 25 basis points. What else? What else are you guys saying? What are we voting for? 68 votes, 69 votes in the chat. Let's stop it right there. No, I'm kidding. They'll be conservative, 25 basis point cut. Yeah. It needs to come down. Jeremy Siegel is calling for back-to-back 75 basis point cuts. I mean, he's always a very outspoken individual, so good for him. As per directions from Biden, 25 basis points. He will save the 50 after Dems win the election to give them and him a boost. Lots of takes in the chat. Once we get to 100, that should be good. We have almost 400 people watching, but some people are on mobile. Some people are watching from their TV. That's another thing I realized. There's a large percentage of you guys that just watch on the TV that have no way of seeing the chat and everything. So one aspect that I do want to get is the chat on screen if I can. But honestly, StreamYard is not that good for that sort of stuff. The software that I use for this. Oh, so yeah, I'm not saying to sell SoFi. The title was more, I meant to talk about this story as well. Is this a buy the rumors, sell the news sort of event? Right. I talked about the real benefits that could happen to SoFi, but that's in a very Goldilocks zone of rates getting cut, no, a soft landing, no hard landing, and the economy continues to grow, GDP grows, unemployment stays great, inflation, it continues on its target, and SoFi continues to sell loans to financial institutions, which can definitely happen. I'm not lessening that ability, but the reason why I say this is that there is a collection of individuals who are taking this stance of, okay, the idea of rate cuts coming is actually what's going to juice, SoFi stock, and that the fundamentals are going to come so much later that the stock might not even hold up that value for too long. I watch it on TV, but I have it on my phone as well. Well, you are an interesting individual, and I appreciate the double viewership. All right, we're going to end the poll there. It's been 3 minutes. That's long enough for me. Okay. So, will rate cuts cut in September? 64% of you say yes. 22% of you say, or sorry, 64% say 25 basis point cut. Here, wait. Gosh, why did I not think about this earlier? There you go. 25 basis point cut, 64%, 50 basis points, 22%, and no, stop talking about it, 12%. Okay? Like I said, the very interesting part of that is the fact that, how do I get to? I need my FedWatch tool. Where are you at? If we go to the FedWatch tool, really, why is it not coming up? Okay, it's reading right now, no chance of a change. Why did it change? Did something just come out? Or is this giving me broken information for some reason? Did news just come out? Did Powell just speak or something? Why is it saying that the current rate is going to stay the same in September? I just showed this at the beginning of the stream. It said 74% or 100% chance of ease, 74% chance of 25 basis points, and what the heck just happened? I need answers, guys. Deep dive. I'll see if I can find something, but is it just the DNC? Is that what's happening right now? Yeah, I'm looking at September 2024. Yeah. Yes, I am. Here, I'll show you. That's this little tab at the top here. I'm looking at current target rate for September, November, December. Okay, I think it's just broken right now because it's telling me January of 2024, it's going to have no rate cut. Or is it just not switching? I don't know. I think it's busted. That or I'm using it incorrectly somehow. I don't know. I even closed it out and reopened it. Wow, crazy. Literally just, yeah, I don't know. Is it showing that on your guys' side too? The CME Fed Watch tool? I was refreshing. I refreshed it like 4 times. I completely closed it and reopened it. I don't know. It might just be busted. I'll check tomorrow morning. But regardless, I think that this is the important point. Like, the poll that is reflected is not being reflected by the rest of the market. The rest of the market thinks that there's not a chance that we don't get a rate cut. And JP's Blueberry Short says it's bugged. Some IT guy punched in the wrong number. All right, ladies and gentlemen, this has been a fantastic show. If you guys are new to the channel, you can consider hitting the subscribe button. That's all you need to do. We go live every single day at 8:30 weekdays. Weekends, I got to think of a show, but I don't know. If you guys want to follow me on X, give me some advice on things that you guys want covered that we could add on the weekends, that would be great. Sometimes Tanner pauses and I think he's frozen. No, I'm reading you guys. I'm reading the chat. 100% chance of hitting that subscribe button. That's a good one. Thank you all so much for watching. Really do appreciate your time. But bye for now.